Hey everyone, I'm back. This is your small business video, the one that I know many of you have been waiting for. It's been really great year anticipating this 20% deduction. Believe it or not, I know I'm about a year late, but those laws did not go into effect until October of 2018. So now I can officially tell you, yes, there is a 20% deduction on your income, and I'll be able to officially tell you everything else because it's been written in the regulations. So now we have a law in place that's going to go on your 2018 tax return. All right, some of the big changes are, yes, we do get a 20% deduction on our income. Now, there was some talk about if you were in the service industry, you could not take that 20% deduction. That is not necessarily the case. As long as you're single and you make $157,500 or less, you can take the deduction. If you're married and you make $500,000 or less, then you can still take that 20% deduction. So that's some pretty good news. Now, if you're not in the service industry, there is some still calculations between that $157,500 or that $500. If you're over it, your deduction is also limited, but that's okay. I'll do those calculations for you and we'll figure all that out. But it's still a great year to be in small business. Now there's some other exciting changes. One is on depreciation. Back in the day when we placed something in service, it was over a certain amount, over $2,500. We would have to depreciate it and take a little bit of it every year over the life of the thing. Right now we have 100% bonus depreciation. That means that if you need it, you can place something into service or property for your business and it's 100% depreciable. Place it in service. I don't have to 179 it. It is 100% deductible in that year, and that's really great if you're making a lot of income and you need that deduction. Now, that does not apply to vehicles, unfortunately. With a vehicle, there are still some rules and some limitations, but if you want to place a vehicle in service, make sure you talk to me about it, and we'll figure out, what the best type of vehicle to buy and what those rates are going to be for you. Since we're talking about vehicles, let's talk about mileage. The mileage rate has gone up from last year from 54.5 to 58 cents per mile. Now remember, if you're using a vehicle for your business, you always have to track mileage because the calculations of what I give you, whether it's mileage or actual, are still based on mileage. So we got to use our mileage IQ and we have to track mileage. I know it's a pain in the butt, but you got to do it so we can get that deduction. Now, the other big thing that happened is on like-kind exchanges. Back in the day, you could go out and you could change your donkey for your mule, for all your donkey and mule owners out there. But we can no longer do that. You also be able to go and drive your car to the car lot and like-kind exchange it for another car. You can't do that anymore. The only thing that we can exchange from one thing for another now is on property. So only a house for a house or a house for a condo, as long as it's real estate or property, we can now go and avoid any capital gains and exchange one thing for another. Okay, so that's a really big change from this year. What else? Let's see, I don't want to forget anything. Excessive business losses, we don't make enough money for that anyway, we don't care. Net operating losses, that's something that's changed. Back in the day, if we had a net operating loss, we could actually go back and you could pay me a lot of money and I could take those net operating losses and apply them to years prior. We can't do that anymore. We can only carry our net operating losses forward. So if we have excess losses that we weren't able to use in a year, we can use them next year and the next year and the next year until they're all used up. Okay? That's pretty cool. I think that's it. I don't think there's anything really big that I need to bore you with other than moving expenses. If you do have an employee and you pay their moving expenses, you don't have to put that in their wages, but the employee, they cannot deduct moving expenses anymore on a 1040. That's one of the things that did go away. And I think that's it. Oh yeah, one more thing. Your corporations, if you have a Florida corporation, those have to be renewed by May 1st. So don't forget to renew those. If you need my help, I'm more than glad to help you renew that corporation. And yeah, tangible tax returns are going to be due, but I've only got a few of you that have those. And really, that's it. I can't thank you guys enough, truly, and from the bottom of my heart. You guys teach me so much. I know you think that I teach you a lot, but no, you guys teach me so much about small business every day. You're true heroes, in my opinion. You're risk takers. You're amazing. And I just thank you so much for being a part of my life. And I look forward to talking to all of you very soon. Have a good one.